Hey there. Welcome to the podcast version Tech I Spy, where I give you an advance audio-only version of my research weeks before the episode comes out. And today, we're diving into one of the biggest names in the global defense industry, Leonardo. You've probably heard the name before, but trust me, there's a lot more to this company than meets the eye. We're talking about a defense giant, one of the top 10 in the world, with its hands in everything from fighter jets to satellites to cyber defense. This is a company that doesn't just make weapons, it shapes the future of warfare. But with big power comes big problems, and Leonardo's future is anything but certain. We're going to break it all down. The strengths that make this company a powerhouse, the weaknesses that could drag it down, the massive opportunities coming from Europe's defense spending surge, and the serious threats that could undermine it all. So sit back, get comfortable, because this is going to be a deep dive into the world of high-stakes defense, where billions of dollars and national security are on the line. Let's get into it. Leonardo. You know the name. Not the guy who painted the Mona Lisa, though, yes, that's the inspiration behind the company's name. No, I'm talking about Leonardo S.p.A, the Italian giant in aerospace defense and security. This company, it's not just big, it's a cornerstone of modern European defense and one of the most influential players on the global stage. And let me tell you why. Leonardo's strengths. Wow. Where do you even begin? First of all, this is not some minor defense contractor scraping by on a couple of government contracts. No, Leonardo is a juggernaut. It's one of the top 10 defense companies in the world. Let that sink in for a second. Out of every single company on the planet working in this space, Leonardo is in the top tier. And within Europe, it's second only to BAE Systems in terms of size and influence. That's the kind of dominance that doesn't just happen overnight. Let's talk about helicopters. Leonardo's helicopter division, it's world-class. They've got a range that's almost ridiculous. Small, lightweight models for quick transport? They've got that. Medium-sized utility choppers? No problem. Heavily armed combat helicopters designed for high-stakes missions? Oh yeah, they've got that too. And this isn't just a legacy strength. They recently bought Copter, which gives them the SH-09, a next-generation light helicopter that's already turning heads in the industry. That's not just maintaining dominance, that's expanding it. And then there's the aeronautics division. Leonardo is a major player in military and civilian aircraft production. Ever heard of the Eurofighter Typhoon? Yeah, Leonardo is a key partner in that program. This is one of the most advanced multi-role fighter jets ever built, a strategic powerhouse for the nations that operate it. But it's not just military aircraft. Leonardo also has a 50% stake in Italiana, which makes those highly efficient regional turboprop planes you've probably flown on if you've ever taken a short-haul flight in Europe. Oh, and they're a core partner in the Global Combat Air Program. This is a project with the UK and Japan to develop a next-generation fighter jet. Think cutting-edge stealth, advanced AI integration, and weapons systems that are more science fiction than reality. And Leonardo isn't just involved, they're a driving force behind it. Now, electronics. This is where things get really interesting. Leonardo makes radars, sensors, communication systems, the whole technological backbone of modern warfare. But it's not just limited to military use. Their technology is in civilian infrastructure too. Airports, maritime traffic control, even cyber defense. Their naval artillery and armored vehicles, world-class. Their underwater systems for submarines and unmanned underwater drones, unmatched. They even own DRS technologies in the United States, which gives them a solid foothold in the highly competitive American defense market. That's not just strong, that's strategic positioning at its finest. And let's not forget space. Yes, space. Leonardo is a major player here too. They own Telespazio and Thales Alenia Space, two of the biggest names in satellite systems and space technology. Telespazio handles everything from designing satellite systems to launch services to satellite control once they're in orbit. Thales Alenia Space is involved in weather monitoring, Earth observation, defense satellites, and scientific missions. Leonardo isn't just participating in the space race, they're one of the architects of it. And they're planning to launch a constellation of 40 satellites by 2028. That's not just ambitious, that's empire building. Financially, Leonardo is rock solid. In 2024, they brought in over 20 billion euros in new orders. That's not just growth, that's rapid expansion. Their revenue beat expectations. Their operating cash flow was strong enough to bring down their debt to under 1.8 billion euros. And they doubled their dividend. Let me repeat that. They doubled their dividend. That's a company with serious financial muscle and the confidence to reward its shareholders while still investing in cutting-edge projects. And you know why they're able to pull this off? The Italian government. They hold a 30% stake in the company, which gives Leonardo a direct line to Italy's defense budget and strategic direction. That's not just a financial safety net. That's political influence and stability. When your biggest shareholder is the government, you're not worrying about short-term market fluctuations. That's long-term security baked into the company's DNA. Leonardo isn't just a defense contractor. It's an industrial and technological powerhouse. They're in helicopters, jets, satellites, missiles, cyber defense. You name it. They've got global reach, strategic partnerships, cutting-edge technology, and financial stability. That's not just strength, that's dominance. Leonardo, a powerhouse, no doubt about it. But even giants have cracks in the armor. For all the strength and dominance, Leonardo isn't without its flaws. And when you start looking closely, some of them are hard to ignore. Let's start with the company's structure. Leonardo is massive, sprawling, even, with operations in over 20 countries and products being used in over 150. That kind of reach sounds great on paper, but in practice, it creates a level of complexity that's hard to manage. Different divisions, different national regulations, different market conditions, it all adds up. And let me tell you, managing that kind of complexity isn't easy. There have been reports, more than once, that Leonardo struggles with internal coordination. Information flow between divisions isn't always seamless. That's not just an operational headache, it's a strategic vulnerability. When your aeronautics division and your electronics division aren't fully aligned, that's a problem, especially in an industry where integration of systems is everything. Then there's the issue of product failures and delivery problems. The NH-90 helicopter program, that was a mess. Leonardo is a partner in the development of the NH-90, which was supposed to be a state-of-the-art medium-lift helicopter. But the program was plagued with delays, technical problems, and cost overruns. Customers, including the Norwegian military, were so unhappy with the helicopter's reliability and performance that they outright cancelled their orders. When a defense customer, especially a NATO ally, rejects your product and walks away, that's more than just a financial loss. That's a reputational hit. And reputation matters in defense, because governments and militaries remember that kind of failure when it's time to sign the next contract. And the problems with the NH-90 aren't an isolated incident. Leonardo's M346 trainer jet, designed to train the next generation of fighter pilots, has also faced issues. The M346 has had multiple accidents and malfunctions during test flights, and while no fatalities have occurred, mechanical failures on a platform that's supposed to train pilots in handling high-stress combat scenarios. Not exactly the kind of confidence builder you want when you're trying to secure export contracts. Leadership, that's another weakness. Leonardo's management has a history of instability. Let's just say the top floor at Leonardo's headquarters in Rome has seen more than its share of turnover. Between 2011 and 2017, the company cycled through multiple CEOs, and each new leader brought in a different strategic vision, different operational priorities, and different cost-cutting programs. That kind of inconsistency filters down. Middle management starts to hesitate when making decisions because they're not sure if the next CEO is going to rip up the plan and start over. Even under the current leadership, which has been relatively stable, There have been concerns about slow decision-making and overly cautious strategy when it comes to expanding into emerging markets. Playing it safe might work for a while, but in a rapidly changing defense landscape, hesitation can be just as dangerous as recklessness. Another crack in the foundation. Profit margins. Leonardo's financials are stable, sure, but the margins on some of their key products are thinner than you'd expect from a top-tier defense contractor. The helicopter division, for example, generates strong revenue, but the profit margins have been under pressure because of rising production costs and the need to continuously update platforms to meet evolving customer requirements. And let's not forget about the electronics division. Margins there have also been squeezed due to increased competition from both American and European rivals. A company can't survive forever on volume alone. Eventually, you've got to improve profitability, and Leonardo's performance on that front has been mixed at best. And finally, we have the problem of over-reliance on government contracts, specifically Italian government contracts. Having the Italian state as a major shareholder gives Leonardo political stability, sure, but it also means that a large portion of their revenue is tied to Italian defense spending. And Italian defense budgets, well, they're not exactly growing at an impressive rate. When nearly 20% of your total revenue comes from a single government, and that government is dealing with budget pressures of its own, that's a problem. It creates a strategic dependence that limits Leonardo's flexibility. If the Italian government decides to cut spending or shift priorities, Leonardo will feel it hard. So, what does that all add up to? Leonardo is big, powerful, but it's not as agile as it should be. Management turnover, product reliability issues, thin margins, and dependence on government contracts, those are real weaknesses. And in the defense industry, where margins for error are razor thin and competitors are always circling, those weaknesses aren't just annoying, they're dangerous. Leonardo, it's sitting on a gold mine of opportunity right now. The landscape of global defense is shifting fast, and for a company like Leonardo, that's not just good news, it's a strategic windfall. Let's talk about European defense spending. Historically, Europe has underinvested in defense. For decades after the Cold War, European governments cut back on military budgets, scaled down production of advanced weapon systems, and basically let the United States handle most of the heavy lifting when it came to defense infrastructure. But that's changing. Fast. And it's not changing because of some sudden ideological shift. It's changing because Europe suddenly finds itself in a much more dangerous neighborhood. Russia's invasion of Ukraine in 2022 was the wake-up call. NATO, which had been quietly drifting along for years, suddenly had to get serious about military readiness. European countries realized that relying on the United States for protection wasn't a long-term solution. They needed to increase their own defense capabilities. And that means spending. Big spending. The European Union has announced plans to increase defense budgets across the board, and NATO members are under pressure to meet the alliance's target of spending at least 2% of their GDP on defense. Germany alone has pledged to increase its defense budget by over 100 billion euros. France, Italy, Spain, and Poland have all announced similar expansions. And Leonardo, sitting right in the middle of the European defense sector, is in prime position to benefit. Why? Because this isn't just about increasing troop numbers or buying more ammunition. Modern warfare is about technology, advanced aircraft, integrated communication systems, cutting-edge cyber defense, and space-based assets. That's exactly where Leonardo excels. Let's break down exactly how this plays out. First, aircraft. The Global Combat Air Program, that joint venture between Italy, the UK, and Japan to build a sixth-generation fighter jet, suddenly looks a lot more valuable when European governments are flush with new defense funds. Leonardo is a core partner in that program, which means not only will they receive direct funding for research and development, but they'll also have a guaranteed customer base when the jet is ready for production. This isn't some speculative future project. European governments are going to need next-generation air superiority platforms, and Leonardo is already holding a ticket to that future. Next, helicopters. Increased defense spending means expanded procurement budgets, and that means new orders for Leonardo's helicopter division. NATO forces are heavily reliant on rotary-wing aircraft for search and rescue, special operations, and battlefield logistics. Leonardo's AW101 and AW159 helicopters are already in service with multiple NATO forces, and with increased defense spending, orders for upgrades and new models are almost inevitable. Plus, Leonardo's acquisition of Copter and the addition of the SH-09 light helicopter puts them in a perfect position to supply both military and paramilitary forces with next-generation lightweight rotorcraft. Then we've got the electronics sector. European militaries aren't just looking to buy more tanks and planes. They're investing heavily in advanced battlefield management systems, secure communications, and electronic warfare capabilities. That's Leonardo's bread and butter. Their radar and sensor systems, already used by NATO forces, are going to see a surge in demand as European militaries modernize their command and control infrastructure. Plus, cyber warfare is now a top priority for every major military power. Leonardo's expertise in cyber defense and secure communications systems gives them a strategic edge in bidding for these contracts. And let's not forget about space. Military satellites for intelligence gathering, navigation, and secure communications are a core part of modern defense infrastructure. Leonardo's satellite constellation project, which aims to deploy around 40 satellites by 2028, suddenly looks like a stroke of strategic brilliance. European governments are going to need independent space-based surveillance and communications capabilities, especially if geopolitical tensions with Russia and China continue to escalate. Leonardo is already positioned to offer that capability, which means direct military contracts, long-term servicing agreements, and, most importantly, strategic influence in European defense policy. There's also the land-based sector. The joint venture between Leonardo and Rheinmetall to develop next-generation tanks and armored fighting vehicles is going to be a major beneficiary of increased European defense spending. European militaries have been running aging tank fleets for decades. The German Leopard 2 and the British Challenger 2 are both Cold War-era platforms. But now, with expanded defense budgets, European governments are actively looking to replace and upgrade their land forces. Leonardo's joint venture positions them to compete for billions of euros in armored vehicle contracts over the next decade. And finally, there's the geopolitical dimension. Increased European defense spending isn't just about hardware. It's about creating a more integrated and interoperable European defense framework. Leonardo is one of the few European defense contractors with the scale and technological capability to offer end-to-end solutions across air, land, sea, and space. That makes them a strategic partner not just for individual governments, but for the European Union and NATO as institutions. That kind of positioning gives Leonardo not only financial upside, but also political leverage, which, in the defense industry, is just as valuable as market share. So, what's the bottom line? Increased European defense spending isn't just a good thing for Leonardo, it's transformative. New aircraft, new helicopters, new satellites, new cyber infrastructure. Leonardo is positioned to benefit across every major category of defense modernization. And because of their existing relationships with NATO and the European Union, they're not going to have to fight to get a seat at the table. They're already at the head of it. This is not just an opportunity for growth. This is an opportunity for dominance. Leonardo, it's sitting on a goldmine of opportunity, sure. But you know what comes with opportunity? Risk. And Leonardo is facing some serious threats right now. Threats that could unravel all those strategic advantages if the company isn't careful. Let's start with geopolitical risk. Leonardo's success is tied, almost entirely, to government spending. And not just any government spending. But defense budgets. That's a tricky business because defense spending is heavily influenced by political cycles. Right now, Europe is in a defense spending boom, but that's driven by the war in Ukraine and growing tensions with Russia. If, for example, the war in Ukraine and growing tensions with Russia. If For example, peace were to break out tomorrow, or if there's a major political shift toward isolationism in key European governments, that money could dry up fast. European governments have already shown that when the political winds shift, defense budgets are often the first thing to get cut. Leonardo could go from record orders to sudden cancellations almost overnight. And speaking of political risk, the Italian government. Yes, it's a strength that the Italian government owns about 30% of Leonardo. It gives the company stability and direct influence over national defense policy. But it's also a weakness, because when your largest shareholder is a government, you become vulnerable to political instability. Italy is not exactly known for having the most stable political environment. Governments in Italy tend to rise and fall quickly, and when political leadership changes, defense priorities can shift. If a new Italian government comes to power and decides to cut defense spending or push Leonardo in a different strategic direction, that's going to create serious headwinds for the company. Let's not forget about competition, and not just from the usual suspects. Leonardo's competitors aren't just BAE Systems and Lockheed Martin anymore. The global defense market is becoming more fragmented, with new players emerging in South Korea, Turkey, and even China. South Korea's KAI, Korea Aerospace Industries, is starting to compete aggressively in the export fighter market. Turkey's Baykar is leading the field in drone technology, and Chinese firms are starting to undercut Western manufacturers on price, especially in emerging markets in Africa and South America. Leonardo's product line is strong, but it's not invulnerable to competitive pressure. If European governments decide to source cheaper alternatives from new suppliers, Leonardo's market share could shrink quickly. Then there's the problem of supply chain vulnerability. Modern defense manufacturing is incredibly complex. You're talking about thousands of components sourced from dozens of countries. The COVID-19 pandemic already showed how fragile global supply chains can be, and the defense industry is not immune to these problems. Raw materials, rare earth metals, titanium, carbon composites are sourced from politically unstable regions. If supply chains are disrupted by war, trade conflicts, or even natural disasters, Leonardo could find itself unable to deliver key products on time. And in the defense industry, delivery delays aren't just inconvenient. They can lead to contract penalties and damage client relationships. Cybersecurity is another looming threat. Leonardo is heavily involved in cyber defense, but that makes them a target. Defense contractors are prime targets for state-sponsored hacking groups, particularly from China, Russia, and North Korea. If Leonardo's systems are breached, it wouldn't just be an embarrassment. It could lead to the theft of sensitive military technology and classified government data. A successful hack could not only undermine Leonardo's reputation, but could also lead to sanctions or restricted access to future government contracts. And then there's the American problem. Leonardo's presence in the US market is built around its subsidiary, DRS Technologies. But the US defense sector is highly protected, and it's dominated by giants like Lockheed Martin, Northrop Grumman, and Raytheon. Leonardo's ability to secure major US defense contracts is limited by the fact that the Pentagon tends to favor domestic suppliers. Even with DRS, Leonardo is fighting an uphill battle to expand in the US market. And with growing protectionist sentiment in American politics, that fight could get even harder. The commercial market isn't exactly a safe space either. Leonardo's stake in ATR, the regional aircraft manufacturer, is vulnerable to shifts in the aviation market. Rising fuel costs, labor strikes, and increased competition from emerging aircraft manufacturers like Embraer and Comac, the Chinese state-owned aerospace giant, could undermine ATR's profitability. If ATR starts losing market share or faces production problems, that could drag down Leonardo's financial performance even if the defense side of the business remains strong. And let's not forget regulatory pressure. Leonardo operates in one of the most heavily regulated industries on the planet. Defense contracts are subject to export controls, licensing agreements, and political oversight. If the European Union or NATO decides to tighten regulations on arms exports or limit the sale of certain weapon systems to politically sensitive regions, that could directly impact Leonardo's revenue. The Italian government has already come under pressure from the EU over arms exports to the Middle East. And if Leonardo gets caught up in that political crossfire, it could mean the loss of key contracts. Lastly, and this is a big one, reputation. Defense companies live and die on reputation. Leonardo has already taken hits from product failures like the NH-90 helicopter and the M346 trainer jet. If they stumble again, if another high-profile product fails, or if a major customer pulls out of a contract, that could have long-term consequences. Military customers have long memories, and if Leonardo starts to be seen as unreliable or technologically behind the curve, customers will start looking elsewhere. So what does all of this mean? Leonardo is in a position of strength, for now, but it's surrounded by risk. Political instability in Europe and Italy, emerging competition from Asia, supply chain vulnerabilities, cybersecurity threats, and protectionist policies in the US. Any one of these threats could seriously undermine Leonardo's market position, and if more than one of them hits at the same time, even a company as dominant as Leonardo could find itself in real trouble. So, where does that leave Leonardo? It's a complicated picture. A company with undeniable strengths, clear weaknesses, major opportunities, and serious threats hanging over its head. This isn't some small, niche defense contractor. Leonardo is a strategic powerhouse, one of the largest and most influential players in the global defense sector. Its strengths are formidable. A dominant position in helicopters and military aircraft, deep expertise in electronic systems, and a growing foothold in space and cyber defense. Financially, it's solid. Increasing orders, reduced debt, and a growing dividend all point to a company that's in control of its own destiny. But strength alone doesn't guarantee success, not in this industry. Leonardo's internal weaknesses are real. The management turnover weaknesses are real. The management turnover, the thin profit margins in key divisions, and the lingering damage from product failures like the NH-90 helicopter, those are not small problems. They point to structural and operational issues that could limit Leonardo's ability to capitalize on its strengths. If the company doesn't address these issues, its long-term growth could stall. Or worse, it could start losing ground to more agile competitors. And then there's the geopolitical landscape. Increased European defense spending is a massive opportunity, perhaps the biggest in Leonardo's history. New fighter jets, new helicopters, new command and control systems. Leonardo is positioned to secure billions in new contracts. But defense spending booms are unpredictable. If political priorities shift, if NATO decides to pull back, or if European governments lose their appetite for military expansion, that opportunity could evaporate overnight. And let's not forget about competition. Leonardo isn't operating in a vacuum. Lockheed Martin, BAE Systems, Dassault, and a growing number of Asian defense firms are all circling the same contracts. Leonardo's ability to hold onto its market share, especially in export markets, is going to depend on how well it executes technologically and operationally. The pressure is on. So what's the verdict? Leonardo is strong, but not untouchable. Its strengths give it a strategic edge, but its internal weaknesses and the unpredictable nature of the defense sector make it vulnerable. The next few years are going to be critical. If Leonardo can tighten up its operations, improve its product reliability, and take full advantage of the European defense spending boom, this company could rise to an even higher level of dominance. But if the weaknesses persist, if product failures continue, if management can't execute, Leonardo could find itself stuck, watching as more agile competitors seize the opportunities it should have claimed. It's a high-stakes game, and Leonardo is right at the center of it. The next move is theirs. And that's a wrap on our deep dive into Leonardo, a company with massive strengths, serious challenges, and a future that's balanced on a knife's edge. If you enjoyed this breakdown, don't forget to hit that like button and subscribe to Tech I Spy for more in-depth analysis on the biggest names in business and defense. Let me know in the comments what you think about Leonardo. Is this a company destined for dominance, or are the cracks already starting to show? Thanks for watching. Please subscribe if you aren't already, and I'll see you next time.